So good morning, guys. It is Friday the 17th of November. This is the DaxTrader Premium webinar. Just said it before I press record, but welcome, guys. Just got an error alert just pop up. Let me just ignore that. So yeah, welcome to the new faces. Welcome to the regulars, and the ones that are here every day. Hello, guys. Very well. Hope you've had a good trading week. I know that we've had an interesting one at that. But a bit of an agenda that we've got to work with today. So we're going to take a look at the usual bits and pieces. So we're going to take a look at the buy and sell setups that are out there. We're going to take a look at the price action from yesterday. We'll do a bit of a roundup for the trades that we've had this week. Perhaps a bit of Pitchfork practice, which is one of the major tools that we use in the premium channel. It's part of Alan Andrews' work. And of course, we'll take a look at a quick outlook for next week. All right, let's get started then. So trading financial markets is risky. It involves the risk of losing our invested money. The webinars are provided for educational purposes only. No investment advice is provided. So if you decide to enter a trade on the back of any of this information, then please do so entirely at your own risk. Okay, so I've got a lot of charts in front of us here on the screen, but I'm going to actually just take us back to this one here. Let's go and have a look at the story for yesterday. Right, so I'm looking at a 100 tick chart. It's not a time frame. Each of these candles represents 100 trades. And so it might look different to what you have on, say, a 5-minute chart or whatever it might be. So first things first, and I've got a message here. So we had a long yesterday at 12,894 that was entered a day or two back. We got out of that at 1339 for 145 points. What we also then did do is sell the market, which was closed out for a loss of 40 points. So that was yesterday's action on the DAX. But this is pretty much what I saw as we were going through the day. So we had a gap from the previous day. In fact, if you go back the day before that, John mentioned this, we'd gapped the previous day's gap. So we've actually left Hammer Island behind. Now that's pretty bullish. So we've left behind a kind of a hammer on its own with two gaps either side, a gap either side. And that does suggest that it's going to be pretty bullish. Now, we might find some volatility beforehand. We might come back and even test this and bait that little area down here, which we'll come back to later. But, it's a pretty bullish signal. So we gapped it. We're tempted to close it. And we've created our early high right up here at what that'd be about 1370 something. And that was the point of ignition for the first move of the day down. Now we could actually just take all of the lines off this chart and actually do a bar by bar read. We'll do that for the next webinar. But for today we'll ignore that. So the point of ignition was pretty strong. We had this kind of mini consolidation area in here. And as this move was developing, it started to consolidate and grind here. And so that would kind of give you an opportunity to mark out a balance point. So you would just simply take your fib tool. You could use any other tool, but the fib tool is easy for me. And the two bits that you're using really are the first line and the 50 line. And as you've got some price action kind of developing, and you've got this kind of slow grinding movement here, you would take your fib tool and think, right, if this is going to be a balance point, then that should start right up there. You put your 50% line somewhere in the middle of that price action because you're expecting price to come down and complete the move. All right, now that idea is a zigzag balance point. It's only one of a lot of different types of balance points, but balance points are really, really good tools to kind of get the hang of if you're trading intraday and trying to anticipate moves. Now, in this particular case, what you could do is, first of all, always look at the swings of the market. What is the market doing? What's the underlying trend of the market? And that's essential. You have to figure that out because you need to know what your trade is going to be doing. Let me explain. So if, for example, we assume that the whole market prior to, today, so go way back left and look at the chart, what is price doing? Let's assume that it's bullish. All right. I don't think it actually was. I think minor swings were actually bearish, but let's just assume that we believe that the trend of the market is bullish. Okay. That means if we're going to be selling this market, which is what we would be doing in this particular case if we identified a balance point here, and we're thinking it's coming down there, then we're going to be selling the market, aren't we? But the market is bullish and we're selling the market. So what does that mean? Well, it means we're fading the market. It means we're counter trend trading and we're fading it. So as you've established that, the rules for me in my trading plans say that if I'm going to be counter trend trading or fading a market, then I need at least 4-to-1 on any trade that I go into. If I don't get 4-to-1, then I'm not interested. So for the newer guys that are perhaps not so familiar with money management and the risk reward ratios, they're essential. Absolutely essential. And the key component to calculating your reward to risk ratio is your stop loss. And if you're trading without stop losses, good luck, because more often than not, you'll unfortunately have an unhappy ending to that tail. I mean, I'm not going to say it doesn't work, but most likely it's not going to work. You have to have a stop loss. It's like driving without brakes. So to put your stop loss in, let's say your stop loss is 20 points. You know how much you're risking on that trade. You're risking 20 points. Yep, pretty simple, I know. But so your reward has to be 4 times that size, which means you've got to do a set and forget trade based on 4 times the amount that you're risking on the stop loss. That might not be 20 points. It might be 5 or 3. I don't know what you guys want to trade, but it depends on in my opinion, setting a fixed amount like 10 or 15 stops is not the right thing to do, because you need to place your stop loss behind some structure. You need to place your stop loss behind something that's reacted in the past, and that might vary between 5 to 20 stops or pips or whatever. So this particular case, this is the kind of idea that you would have. You would start to see this move develop, and you've got this kind of push line here as price starts to sort of build on it. It's building up this little coil, and you could say to yourself, right, well, I think that it's going to be heading down, so I'm looking for a break to the downside. So you've got 2 choices. You can either sell on a bounce of the top coil, or you can sell on a break of the lower level and put a stop loss above the recent high. You want a minimum of 4-to-1. You don't get it, don't take the trade. Simple as that. Now your line might have been pulled slightly more. It's getting a bit messy on this chart, so you have to excuse me. It may have been pulled in a little bit tighter, maybe there, and maybe your stop loss, your entry was a little bit higher. You can try and curve fit the trade as much as possible, but the reality is you're looking for a reason. You could have pulled the stop loss in a little bit lower. But either or, that would have been the thought process as the move was building, and that could have been an opportunity to get into a short-term trade. Fade short. And you could have roughly got 4-to-1 out of that. As it happened, the price did actually come along and tag the extension. There's the 50%, the Fibonacci line here. I've expanded it a little bit wider this time because you'll notice here that it tested it again. So anyway, that is an example of a balance point. Got a reaction from that level, and it came back into this previous zone. You'll notice that you could argue is almost like a mini mountain as the base of it. But anyway, it comes back to test this balance point area, and it starts to consolidate one more time here before completing the move once more, almost exactly to the previous point here. Yeah, so the point of ignition was up there, tagged that level, released all of the people that were trapped long, and allowed them to dump out of their position. So you could say that this area down here was a wash. You remember there are the three main types of reaction that you get at certain areas. And if you're not familiar, I'll quickly explain it again. So when you've got a price level, let's say it's a horizontal price level, you're often going to get 3 types of reaction at that particular level of support or resistance. Let's assume it's support. You're often either going to get that sort of reaction where you get a bounce, or you're going to get something similar where it starts off looking like a bounce, but it actually does that. That's a wash. Or you've simply got something similar to that again, which is not a wash. It's actually a break and a switchback, and then a full-on continuation through. Now, there are other outcomes. There are other things that it can do, but they're the three most common that we look for. And in that particular case, was a nice example of a wash, as you can see. But it found resistance here. So that would have been an area of alert there, because you'd be expecting that to continue higher. A lot of people would look at that as a head and shoulders type pattern. In fact, you could argue that. But it found its extension here, and pretty much from there, you're sort of in the weeds, because it's that time of the day where it's just not very nice to trade the DAX. So there wasn't a lot that happened. Kind of went a little bit sideways for a bit. Then we started building up this nice little channel. I don't often tend to trade channel breaks, but it does provide some people with signal. So you could argue there that would have been a potential break. There was a bit of a long candle there, wide range bar, and would have interested people to kind of start looking at a long position. But for me, there's not really a lot going on there. So as it starts to kind of move and it gets back in towards the second part of the session, the afternoon session, where you often get a little bit of volatility, as the US volume comes in, you'll notice there's an interesting point of ignition right there at 0.7, which is where price gets thrown off the cliff. It starts not really going anywhere until all of a sudden, zoom. There you go. Price gets thrown. Now that's an interesting level to mark out, because once it finds some support at previous levels, sort of strengthens that area. Once it finds support at that level, it baits it, doesn't it? Look at it. Baits it. Comes back in, tests the level, tests the point of ignition perfectly, almost to the pip, and gets thrown again. So I was asking my question, is that a pocket dump right there? Is that the opportunity to sell the market? But I didn't do it. And then these lows here are pretty much their jobs to try and take out this low. Both of them failed, couldn't do it. So then you start to think, well, maybe this zone now is going to get taken out. And it did. So it was an interesting day to kind of run through it. And if you guys don't do this, look at bar action, then you should. Don't get wrapped up on it, because you can start getting into too many trades intraday. But it's really good practice to kind of run through and review the session at the end of the day. So just kind of see if you can read what happened. What's the tail that price action is trying to tell you. And there are a few tools that you can kind of mark out: balance points, pockets, looking for the wide range bars to try and find out what's happened. And of course, your pitchforks and your ACR line sets and median lines and stuff like that, all the Alan Andrews work that we do. But sometimes just don't look for a setup, just look at what happened, try and read the story. All right, so that was kind of my thinking for yesterday as we were going through the day. Now today, of course, is a new day. We've got a gap lower, and we have actually, by the looks of things, been testing some of these bits. And I think we've actually just had a trade this morning that's been stopped out. Looks like I've been tagged. So I think I've been hunted, in fact, because I think I've been stopped out by about 1 or 2. One of those things. So let's have a look at what else we're going to go through. We have got setups and some pitchfork practice. All right. Let's come out of this one. Let's go and have a look at the regular charts. All right, so this is a familiar one. This is where we normally start. This is the TPO. If you're not familiar with this chart, it's the basic profile of each day over the last however many days or weeks of trading on the DAX. You'll notice over on the left, you've got the diagrams that we just talked about a moment ago. The blue lines are POCs, points of control. If they're still blue, it means that they have not been touched. Price will often come to test a previous naked POC because they're quite magnetic. Now, the bit I was talking to you about a moment ago was this one right there. Look at that. That is an outlier. Straight away, the first thing that would interest me if I was going to be taken along on this market would be a test from there. Touch that POC and see you later. That would be interesting. You'd have to argue that maybe your stop loss is going to have to go under there. So that's a huge trade. And I don't think many people have got the bank to be able to support that kind of move. But that would be on the basis of the major swings of bullish. So you'll be looking for 3 to 1 because you're following the trend. And you could probably get away with a tighter stop loss than that. So you can get nearer 3.5, 4 if you did that sort of move. But you probably are not going to be targeting that level of swing action. And yeah, you'd be targeting that consolidation area in there. So it's kind of a part of the thought process. Now, that is a retracement back to the Wednesday naked point of control. So that sticks out to me quite clearly. As far as price action goes for yesterday, so the distribution was not really unusual. It was a value area was in the sort of just below half. We've got a low volume node above the Tuesday low volume node, which is interesting. But this little area here, price doesn't really want to be in there. Saying that, it's currently in it at the moment. Or it's just underneath it. But we're still finding reactions around that zone. So keep an eye on it, mark it out in your chart. But you'll notice that, yeah, it's standing out on its own, isn't it? So it broke below Tuesday, traded below Tuesday for the whole day, then broke back inside Tuesday. Was another inside day there. We're currently forming another inside day here. So that's pretty bullish for me. That is pretty bullish. All right, daily chart. Let's just go and have a look at the daily chart. I've added an extra chart, so it's kind of messed up the order of my book. There it is. Okay, a little bit messy at the moment. So let's just go and start tidying it up, I think. So there's a quick look at that hammer there. See it standing out on its own, pretty bullish. And so the idea of this shaded zone here is that price action has shot away quite aggressively. I mean, look at the size of this move. Point out to me where on that move, excuse me, there we go. Point out to me on this move here. Let's try and highlight this. From that point down there to here, where the significant pullback was. There. Well, in my opinion, the answer is it hasn't happened. There isn't one. There isn't one. But that is. So, yes, it does look bearish short term. You know, the minor swings are bearish for sure, but the major swings, clearly bullish. So Paula, yeah, I think it was. The stop loss was too tight, but you know, that's okay because we don't mind having little bites at them. We know that with 3 or 4 to 1, in actual fact, the trade that I did this morning was, I think, nearer 6 to 1. We know that with a 6 to 1 type trade, we're going to be wrong probably 75% of the time. And we can be wrong 75% of the time. Because what's 7 to 1? It means we need to be right 14% of the time to break even. Round it up to 15% to account for, you know, spreads or whatever. Round it up to 18%, 20% to account for spreads. It means that we're going to be wrong 80% of the time to break even. So I don't mind. I don't mind that. It's okay. The reward makes up for it. But yeah, it was, hindsight's a beautiful thing, but it was a little bit too tight. So that was just answering a question that just blinked up in the chat channel. And just to come back in on this daily chart. So yeah, I'm not going to give away everything today in terms of what my thinking is and where I'm going to go for long term. But you know, this fork is still valid for me. And this fork is just simply pulled from the pivots. Major swing pivots. Not redesigning anything, just pulling the lines. Okay, so I kind of expected a pullback, but not as much as it has, but kind of pleased that it has because it's made up for quite a significant swing without a significant pullback. So this would be classed as that. And that's a bullish signal for me, suggesting that we may well now be able to see a start of this. But I'd like to see a bait, and I don't think it's just going to go straight up from here. We're probably going to see more of a minor pullback first. All right, okay, so I've got 10 minutes left on here, so I better start speeding it up a little bit. Okay, so short-term selling setups. Yeah, I mean, I think if we're going to be heading back to the point of control on the TPO chart, there it is, then you've got an opportunity to sell down to that level. I think I'm actually, which I've missed, I had a signal to sell the FTSE, so it suggests that, you know, there could be an opportunity to sell the market anyway. But you would imagine, just like it has done here, right there, look at that. I think there's going to be some symmetry there. What I'd like to see is that's a upside down line, but you know what I mean. Let's ignore this one here. Down up to create a day that has got a lower low than that and a higher high than that. Similar to this day here. If we get that level of symmetry, yeah, then you could wait for years for that kind of setup. So an opportunity would be to get down to that point of control there. I'm not going to be taking that trade personally, but, you know, it's an opportunity. And off it goes. There you go. See, some of you are taking it. So anyway, let's move on. They're the kind of main setups for me. All right, I'm bullish. I'm just waiting for an opportunity to get long. So I've seen a pretty clear bullish signal. The other opportunity, of course, is to wait for that level there, which would be crazy if it happened. There's a nice level of confluence. You are tagging a reaction line, which is Alan Andrews type work. You've broken through the center line here. Some may not agree that this is the best line set. I think it's pretty good. So you've had the reaction, the action from the two centerline points here, there and there, is after the second centerline point. You've broken through it after consolidation. You switched it back. More often than not, price will then go on to find a reaction at the reaction line. You've also then got a 50% line that runs through here, that level of consolidation, which is a balance point because we found some consolidation and we switched it back again. So that's a nice balance point for me. The completion of the move will be down here, and those 2 points line up quite nicely. So you would then go long from there, put a stop loss under some structure back here, and you'd aim for a test of this high. Gives you 3.5 to 1. It's in line with a bullish move. Fits my plan. So if I don't take that trade, I'll be looking for a bullish bias from that level. So I'll be looking for the short-term setups to go long from there. All right. So pitchforks, don't know if I'm going to have enough time to go through all of this, guys, but that's kind of wrapped up the weekly outlook as well, because that's kind of what I'm going to be expecting for next week, is to find us going long. But we'll see what we can do. All right, so in terms of pitchforks then, you need 3 pivots to draw a pitchfork from. You need an A, B, and a C. And it needs to be a low, high, low, like that example there, or a high, low, high. All right. Now, to draw a pitchfork, excuse me, find your pivots. Now, if you can't find your pivots, you can use an indicator to help you. Now, what I mean by pivots are your swings. Look for your swings. Where in price action are you finding your swings? And you can just simply draw them. There's one there, there's one there, there's one here, there's one there. And it's just called the ones that stand out as kind of being the points where price really made some moves. And you can just let your eyes adjust to the charts and you can just start mapping them on there. But if you can't see them, then you can use a zigzag indicator. You might want to change the parameters up a little bit, but this will do it for you. So your Pitchfork practice can come from using this indicator. You just take that and you look for what price action did. Now with a fork, price action is often, once you've drawn them, going to come up to test the median line. And you'll get the one of three things happening. You'll get a bounce, you'll get a wash, or you'll get a break. And it's really interesting to see those three types of reaction around the median lines of a fork. Once you touch the median line, you'll often find a reaction. Let's say it's a bounce. You'll then find the next thing. What it will do is it will start to coil, and it'll either test the lower median line parallel, or it will come up and break the median line. Then it'll switch it back, and then it will move up to an upper median line parallel. And that's often what will happen with a fork. That's the kind of setup that we're looking for. So go and find out whether it does that by drawing and practicing your forks on these kinds of moves. So, you can pick it on any of these swings. It doesn't really matter or make much difference. So let's just go and, I don't know, pick this one here. 1, 2, 3. Bounced off the median line, took a reaction from the upper median line parallel, came all the way down through the median line to the lower median line parallel. And then, of course, after that, you might say that maybe the fork has done its job and it's finished. So you can do it from any of these. Let's pick another one, somewhere around here. I don't know, that one there. Let's go with... Wow, that one just cleared it out. So price zoomed through the median line and took out the upper median line parallel. So you would have, if you'd have gone long from that zone, would have easily done it. Look at that, came back, tagged the median line again though. And it also switched back the upper median line parallel. And I'm only looking at the zigzags here, but you could draw price action back in on them. Now I'm using Sierra Charts for anybody who's interested. Sierra Charts is a premium charting platform. I highly recommend it. It's incredibly lightweight, which is great for me because I'm running everything on a server. So I remotely access this server. So I need something lightweight so it doesn't chew up all my resources. But yeah, it's worth however many pounds a month, but I highly recommend it. If you want to be taking your trading seriously, you need a good trading platform, charting platform. So that's how you can practice your pitchforks. That's a little mini crash course in what I would recommend you do. And of course, if that's too many mini swings in there, then you can change the parameters on that, or you can use a different time frame or whatever it might be. But you can kind of change the reversal parameters to something like that. Zoom out onto a higher time frame. Well, in this case, it's a tick chart. I was on a 250 tick. Let's go to a 500 tick. And there's one there, look. So you'd have your fork drawn from that point. 1, 2, 3. And look at that. So you've come back, tagged the median line, mini wash there, and you've come back through and broken out of the upper median line parallel. So you could maybe then draw the next fork from the next 3 swings, which would be that one, and that one. And again, you've tagged the median line. In fact, you've gone through the median line. So we'll see what kind of reaction you get there. So got to understand the basis behind this work, and it's Alan Andrews' work. It's what we use quite a lot in the premium channel. It's high probability setups with context taken into consideration as well. It's really, really good stuff. That's only one of the tools that they use, or that we use, should I say. So if you want to know more about that, then come and check out the website, DaxTrader.co.uk. Go to the About DaxTrader Premium Bits and Pieces and find out a little bit more about it there. Or just Google the guy, Alan Andrews. I'm sure you can find some stuff freely available online, but read as much as you can about it. It's great. All right, so got just over a minute left. So if you've got any questions, I might not be able to take those today. This has been recorded, so I'll release a copy of the recording on YouTube. So you can come back and replay it, 'cause there's quite a lot of stuff we may have gone through there that might be new to you. So as a summary, as far as Outlook is concerned, I'm pretty bullish. I would like to see a retracement back somewhere towards that POC. If it does get anywhere near there and I see a bullish sign, I'll be looking to go long. Would I be looking to take a short down to that level? Possibly. There is a gap to close here, so there is opportunity to do so. We are currently on an inside day based on yesterday's profile. We do have a large volume area from yesterday to contend with. So, maybe the best opportunity for a short would be something like a break, test from the underside, and then down. And I'll be looking at selling nearer to that point there. And a long, I'll be looking for a long from similar to that kind of level, or if, of course, if the gap holds, maybe from there. All right, guys, that's it. Less than a minute left on the webinar. Thanks for joining. Have a great day. Have a great weekend. We'll see you back here on Monday. And yeah, send us a message on Telegram or otherwise if you want more information. Thanks for joining. Take care, guys. No worries, Ollie. Thank you. Take care. Cheers, Ronnie. Cheers, Jacko. Thanks, guys. See you later, guys.